Okay, so you ready to jump into this?
Always.
All right, so today we are diving deep into whole life insurance. And
Deep dive.
yeah, a deep dive. But we're not talking about the typical, oh, you need this to protect your family. It's more like, how can this play a role in retirement planning?
Interesting.
Yeah, so our friends over at Diversified Insurance Brokers sent us some of their marketing materials. And they are really making a case for whole life insurance as a retirement strategy.
Huh.
And we're going to break it all down. What are they saying? What are the pros and cons? But more importantly, I want us to think about the questions that you, the listener, should be asking if you're considering this for your own retirement.
Okay, so essentially by the end of this, we want our listeners to walk away with a very clear idea of whether or not this is something they should be considering.
Exactly. So Diversified kicks things off by talking about replacing lost income during retirement, especially for surviving spouses, right? Because if the main breadwinner passes away, Social Security benefits or pension payments could drop.
Yeah, that's huge. And it's something that a lot of people don't really think about. They focus on what that combined income will look like when they retire, but they don't necessarily plan for what happens when that income is suddenly cut in half.
Yeah, and so Diversified is saying, okay, the death benefit from a whole life insurance policy can help fill that gap, right? It can become that safety net for the surviving spouse.
Yeah.
But couldn't you achieve something similar with a diversified investment portfolio or even an annuity?
Yeah, for sure. I mean, annuities are basically contracts with insurance companies where you give them a lump sum or you make payments over time, and they guarantee you a stream of income often for the rest of your life.
Oh, interesting.
But the thing Diversified is really highlighting with whole life insurance is the cash value component, which is where things get really interesting.
Yeah, this cash value thing. It seems like it's a big deal. They keep talking about guaranteed growth, but
Right.
what does that even mean in plain English?
So basically, a portion of your premium goes towards the death benefit, just like any other life insurance policy. But with whole life, another chunk of that premium goes into a separate account. And that's what builds up this cash value. And that account grows at a guaranteed rate set by the insurance company.
It's almost like a savings account.
Yeah, like a super safe savings account. It might not have the highest returns, but it is guaranteed to grow steadily over time.
So it's not subject to all the craziness of the stock market.
Exactly. And that's what Diversified really emphasizes, this idea of stability, especially when the market, inevitably takes a dip.
Because if your 401k is shrinking, you could tap into this cash value without having to sell off those investments at a loss.
Exactly. It gives you more options and a sense of control, which a lot of people are looking for when they retire.
They also mentioned that this cash value grows tax deferred. What does that mean?
Right. So tax deferred means you don't have to pay taxes on those gains in your cash value until you actually withdraw the money. And ideally that happens during retirement. Yeah, because you're probably in a lower tax bracket during retirement than you were when you were working. So it's strategically planning to pay less taxes overall.
Yeah, that's really interesting. They even suggest using that cash value for living expenses or healthcare costs or just, unexpected things that might pop up during retirement.
Definitely adds a layer of flexibility to your retirement plan.
Now, obviously, Diversify is trying to sell us on whole life insurance, but it's only fair to look at both sides, right?
Of course.
What are some of the drawbacks that we need to be aware of?
Well, for one, the premiums for whole life insurance are typically a lot higher than term life insurance, so it is a bigger financial commitment.
Okay.
And while the guaranteed growth is attractive, the returns might be lower than what you could potentially get by investing in the stock market over the long run.
And I remember they said that choosing the right policy is key.
Absolutely.
But what does that even mean? What should people be looking at when they're comparing all these different policies?
Yeah, so you really want to pay close attention to things like the guaranteed rate of return on that cash value, any fees associated with the policy, and surrender charges if you have to withdraw money early.
Got it.
Don't be afraid to shop around, get quotes from a few different insurance companies and maybe even talk to an independent financial advisor who can give you unbiased guidance.
Yes, because this is your retirement we're talking about.
Absolutely.
You don't want to just take anyone's word for it.
Exactly.
Do your research, ask the tough questions, make sure this aligns with your financial goals.
And remember, retirement planning, it's a marathon, not a sprint.
It is. All right, so as we're wrapping up this deep dive,
Yeah.
I'm really curious, if you were in the listener's shoes,
Yeah.
what would be your top 3 questions for an advisor before even thinking about whole life insurance for retirement?
Great question. So first off, I'd want to know how it would fit into my overall financial plan. Like, where does it actually belong in the big picture? And secondly, how does that guaranteed growth compare to other investment options that are out there?
Good one.
And honestly, are there any other strategies that might be a better fit for my situation, depending on my goals and my risk tolerance?
Such a good point. And that's advice that everyone should take to heart. Don't just jump into anything. Do your homework, ask the questions, make informed decisions. And hey, even if whole life insurance isn't the right fit for you, hopefully this deep dive got you thinking about all the different ways that you can build a secure and fulfilling retirement.
A secure and fulfilling retirement indeed.
All right, that's it for today. Thanks for tuning into this deep dive, and we'll catch you next time.
See ya.
Bye.